Hi, I hope you're having a great day wherever you are. Today, I want to talk about, right? Is it time to FOMO now, meaning fear of missing out? That means buy in now immediately without doing any research if you don't have any position in crypto, in Bitcoin? Or do you wait for price pullback before pulling the trigger? Yeah, that's really the question I want to answer today. Now, given that price of Bitcoin is now above $12,000, right, at the time of recording, so basically I want to use a SWOT analysis, strength, weaknesses, opportunities, and threats framework to answer this question, yeah? Because after all, it is a very high price now. It seems like we're in a bull market, but some people are also saying it may pull back to it will pull back to lower prices before rallying again. So who is right, who is wrong? Let's go into it today. Again, just before we dive in, very quickly, disclaimer, this is not financial advice, right? You are definitely required to do your own research, but this is my personal opinion, backed by, some numbers, some news, right? And whatever I think is important analysis data. So firstly, to answer the question, let me give you a quick summary of my answer now, right? And then I will back it up with why I say that. Now, first, this is for people who do not yet have any position in Bitcoin or crypto. I would say it is still good time to buy now, right? But there is a big disclaimer. Why is that? Now, if you were to buy now, right, you have to, and I think the best strategy really for someone who is totally new is to, really hodl on and go in with the knowledge that you are going to hang on to that holdings, right, for a few years more. Yeah. And why? Because you are looking at a target of a six figure, and I'm talking about 100,000 to 250,000 kind of level per unit of Bitcoin from the current price of $12,000. But given that long time frame of few years away, right, we're talking about 3 to 4 years away, then because it's such a long time frame, there will be, right, it won't be a smooth ride definitely, so there will be occasional price pullback of potentially 30 to 40%, yeah, and this is on a daily basis. So that is definitely something you have to be prepared for, right, on that sense. Now, but the thing is that why am I saying for people who don't have, why is it still a good time to buy now? Then we'll look at the charts, right? Then the thing is, for people who already have some, but they think they have not bought enough because when prices were bottoming at the 3,000 to 4,000 level, they have not bought enough, right? Or even at 6,000 to 8,000 level, they still didn't buy in enough, but now they are regretting. So the question is then, should you, if you are in the second group of people that you have not bought enough, but you have some, right? You're definitely better than those people who are no coiners, but then is it worthwhile now to actually top up your position to something that you're fully satisfied with? My personal opinion is that yes, you still can buy now, but maybe for you can buy in stages, right? That means you buy in stages rather than you buy in full allocation now, right? So that's what I think. So why do I say that, right? Now let's look at the charts very quickly. Yeah. So if you look at the candlestick charts, which I thought it is a very good way to analyze, right, where prices are going, right? Because this video is going to be backed up by both candlesticks technical analysis, looking at the pattern of the charts, right, and where are the pricing movements, and also the fundamental analysis reasons, right? Now, so if you look at this chart, this is a monthly data. Each candlestick represents 1 month. And right, so this is also the last bull run started in 1st Jan 2017, which is this level here, right? So you can see, right, the last bull run lasted about 1 year before it topped out at close to 19,000 level, right? And of course it crashed 3,000 level in the end of 2018. That's all we know. And it seemed to be, and if you look at this chart, right, if you can just draw a line from even here, right, to here, you can see, right, it is a very steep one, and then that was the bull run, right? And then here, this point, right? This is another chart. Right, you can see this is a very steep, it seemed to be a mirror image, right? Don't you agree? So you see, it seems very interesting, right? This kind of charts, right? Now, it seems like the last bull run that started in January 2017 until the which lasted about 1 year, and then it crashed right to 3000 level again in 1 year time frame. And very interestingly, we are seeing a very rapid increases in price now, right? That is as steep, which last bull run, it took 1 year to get to this kind of level. Now you can see, right, it's already trending in such a high level. So what I'm saying is, this time, right, which started around April this year, April 2019, this bull run is so much more stronger, because here, right, the last year in 2017, not last year, in 2017, it was like very slow increase, right? Very short bar of candlesticks, right? That means not very strong buying pressure, and then a bit strong, and then it compresses back, weakening back, and then it's strong, and then there's a very sharp lowering prices, and then only it really rallied towards the last quarter of 2017. But now, as you can see in this bull run that started around April 2019, this one has been consistently, very strong at its gathering momentum kind of rally. So this is definitely a much stronger rally, even if you just look at charts compared to 2 years ago. Now, if you look at lower time frame weekly data, right, you can see it very interestingly. There seemed to be a resistance price level at $11,300 thereabout, right? Approximate that price level. You see, there's a lot of price points here. You will see it clearer in the daily charts, right? This is a weekly chart. Again, starting from this is mid 2017, right? You can see that. You can see that even down here, right? If you scroll back to January, so that's about here. You can see this is a very, very small, that means it's very indecisive. You see there are a lot of red, right? A lot of red coupled by the greens, right? It's not a continuous green. So that means a lot of resistance to prices increasing in 2017 in the beginning. Only really in the last quarter, it really rallied like that, yeah? But now you see, in April 2019, here is when it really go up a lot, right? Very little rate, yeah? Now, if you look at the daily charts again, this you can see, there's clearly a resistance level at the 11,300 price range level, yeah? And you can clearly see that the latest price range of $12,200, right, is already above that resistance line. So the chances of it breaking and continue to increase is very high, just based on this kind of technical analysis, yeah? Now, back to the charts. Now, so that was the technical analysis. So very high chance of it increasing, going, that means low probability of, basing on the charts, very low probability of it pulling back very strongly in a very strong downtrend. There may be the occasional pullback, which is very, very hard to time, very, very hard to actually get in, unless you are telling me you are glued to the screen 24 hours a day, 7 days a week. If you can do that, then fine, right? By all means, get in at the lower prices, right? But if you can't do that, then my personal opinion is that really to get in now, where the long term up is still an uptrend, very long term, but there will be the occasional pullbacks, right? If you're lucky, maybe you're able to catch it. But who dare to say that they are so lucky? After all, if you don't even have a coin now, that already ought to tell you that you are already very, very safe person. You're a very risk adverse person, right? That you didn't even dare to risk a little bit of money. So the chances of you even waiting and get in at that low level is going to be really, really low, yeah? And so that was on the charts basis. How about on the fundamental basis? So if you look at the strengths, right, something I really want to talk about is these 3 points, which is very, very strong. There is a very, very high and increasing amount of negative yield bonds. I'm going to talk about that a bit more. And because of the trade war that seems to intensifying, a lot of people are speculating on, and with data backing it up, that the Chinese actually buying into crypto a lot. And lastly, institutional involvement is no longer interest, but they're already being involved. And of course, there are also opportunities supporting the future long-term trend. Now, let's look at the first one, right? So Bloomberg data just about 1 week ago, June 21st, it actually came out with saying that the world now has $13 trillion of debt with below zero yields, right? So what does this mean? This is the chart that is in the Bloomberg article. And you can see, right, in 2017, just about 2 years ago, it's actually much lower level than now. Now, in the just like the last few months, right, just 2 months ago, it's been really increasing a lot. And what is negative yielding bonds? These bonds are basically government bonds, right, that give you negative yield. What it means is that if you put $100 with them, you will, at the end of that contract period, you are going to get less than $100, right? So why are people willing to put so much money into this kind of negative yielding bonds? It's because they believe that, right, elsewhere the risk is even higher, that they're even willing to hold this kind of relatively safe kind of bonds, that they will get back some capital, but is going to be much lower than their initial capital. So this means it's a very strong flight to safety. Why? It's because they see a lot of risk of recession coming soon. That's why they're willing to, sacrifice the immediate yield for that more long-term security. This is actually what it means, yeah? And so given this situation, then which are the safe haven assets that will really increase? And no surprise, is going to be gold, is going to be Bitcoin equivalent, because Bitcoin is like a digital gold, yeah? So again, this just support the reasons, and this must be why a lot of the strong rally recently is because of these reasons, yeah? Next reason, you have the trade war happening, right? And these charts are saying that because of the trade war intensifying, a lot of people in China, they are actually very afraid that their yuan will devalue even further. And so because of that, they need something to hedge. And what other better instruments are there, apart from something that is permissionless, something that is not correlated at all with traditional assets, right? And something that has the huge potential to gain, and that is crypto, and that's Bitcoin here, right? And you can see here, these are actually from Dia, quoting the analysis from chain analysis data, that China, right, are really they seem to be the huge buyer of crypto by holding a lot of tether. That means they need to get their fiat onto stable coins, and then from stable coins they actually then trade into crypto. That's actually what these data are showing, yeah? So it supports the notion that, there are really concerns about the potential yuan devaluing. Institutional involvement, right, already. So as we know, the last rally was really led by investors, and that is why a big reason why the rally could not sustain, because the retail investors, when they hear of any scary news like the clampdown on ICOs, on initial coin offerings, that they flee the market, they really just dump it, right? Because they do not understand the fundamental reasons of why Bitcoin, why crypto is valuable, right? In this economy where every government, anyone can just print fiat money at, limitless, no cap, right? Just continuous to increase their money supply, and then resulting in huge inflation, and that means your fiat money will lose value day by day. So now this time is very different, because this time is actually a lot of it is led by institutions, right? Now this is Anthony Pompliano, which in just a few days ago, June 26, he has this daily write-ups, right, where some of it is free, some of it is to paid subscribers, and one of it on that day he has a 10 takeaways from his trip to San Francisco, which is a Bitcoin conference 2019. It's a huge event in the world of crypto, and he has 10 takeaways, and one of it I thought is very important to talk about is that he said the institutions are not coming, they are already here. Yeah, and he has personally talked to 4 different executives from major financial service organizations and 3 people from endowments or pensions. These are the people with huge money sitting on them, right? And the conversation is no longer we are looking at this space and learning, but instead concentrated on we have already done X, we are interested in pursuing Y, and we evaluated Z but passed on the opportunity. This sense of action left me feeling that real capital is being deployed by these institutions, and the pace of deployment is only going to accelerate. Now, remember that Anthony Pompliano, his firm Morgan Craig, was the first company that are able to convince the first pension fund, right, Virginia County, to invest in crypto firms for now. But that fund have the mandate, they are able to invest directly into crypto, and it's just a matter of time. And he has actually kicked off a domino effect, and it's just a matter of time before the next and more pension funds with huge money, and they have also huge obligations, remember, to pay back their pensioners, right? And really there's no other good financial assets that can give you this kind of rewards. Yeah, so, and that is no surprise why all the institutions are really interested now, and that is why you can see that this current rally, the prices are really more sustained, the increase is more sustained, very little price drop. You see a lot of green candles and not a lot of very little red candles. Yeah, so coming back here, right, but of course, right, then let's talk about opportunities as well. So on the charts, we are seeing that there is a very high chance of a long-term positive trend. Why is that? Halving of the Bitcoin reward is going to happen next May, 2020 May. And this, we are about less than 1 year away. And this kind of time period will just remind people of the kind of scarcity of Bitcoin, right? And really, crypto is mainly led by Bitcoin, and in fact now Bitcoin dominance is even increasing compared to last year and the previous bull market as well. This means that why is that? Now the thing is, halving just show again, right, just fortify the belief, right, the confirmation again, right, that Bitcoin is really scarce, and that gives it a lot of value compared to your fiat money, which continue to be increased in supply. Yeah, and retail investors are not yet in this rally yet. It definitely seems they're not in this market yet for now. It's mainly institutions, right, and that again means, right, they are really the one that will lead to the next rally. So a lot of opportunities there, right? Adoption. In the last bull market, we have a very low awareness and also very low adoption. Now we have a lot of huge companies, including Amazon, right, the big ones, Starbucks, going to accept crypto. We already have a lot of crypto debit cards, which is making it very easy to spend your crypto. We already have a lot of services, something like BlockFi, to offer, staking your crypto and getting an interest in crypto. So again, very maturing. The sector is definitely maturing, yeah. And still, there's so many more retailers not yet, merchants not yet accepting crypto. But still, they are already big names in the game. But they are not, but the only thing is that they are accepting crypto, but they are definitely straight away converting it to fiat. So there is still a lot of room for this space to grow, to mature more. So, what are the potential we are talking about here? What are the opportunities we are talking about here? From about 12,000, or let's round it down to about 10,000, right? Potential upside can be 100,000, 250,000, yeah? And that is talking about, right, 20x to about 25x returns from the current price level over the 5 years period. And you can really just risk very little. And that's the beauty of this kind of trade, this kind of investments, right? Yes, you can invest $1,000, or even you can invest $10,000. Yes, you have a probability, yes, of losing all that 10,000. Yes, this is true. But you also have a high chance of getting 100,000 to 250,000 for that 10,000 you invest now. So the question is, do you have enough, fortitude to take this kind of investments, right? To take this kind of risk? That again depends. If you're young, if you still have your, income earning capacity, why not, right? That's my personal opinion. And that's actually what I think, right? But of course, if you are really, really old, you are living hand to mouth, then definitely this is not for you. And of course, this is also just a part of your portfolio. It shouldn't be 100% of your investment. It should be just a small percent, right? For someone who is young, it can be 10%. But if you're a bit older, you're more conservative, then 2% of your investments, right, of your equity should be maximum 2% in crypto. That's what we're talking about. So you really manage the risk, right? But the potential upside can be very, very huge. But again, right, of course, now thing is, when it's at 100,000, given the supply, you're talking about a total market cap of about $2 trillion. So $2 trillion, how does it compare with something like gold? Gold is currently about 8 trillion. So I'm talking about 1/4 of the market cap of gold. So still very low, right? And even if it's at 200,000, you're talking about $4 trillion plus of market cap. That's half of gold market cap today. Yeah. And don't forget, you still have a lot of other market cap, like your stock market cap, your bond market cap. Those money, we haven't even included how much of those money are going to flow into crypto. Yeah. Because for example, stock market cap, equity market cap worldwide is about 73 trillion. So you're talking about even just 1% flow into crypto is a lot, right? So that is why the opportunity is there. On the weaknesses, right? Of course, as I've said earlier, it is a high risk trade. Yes, it is only for people, again, who are younger, or even if you're not super young, you have income earning capacity in front of you, and if you don't risk too much, right, you cap it really to a small percentage of your total equity, then you are playing it safe, right? But yes, it is a very high risk, yeah, no doubt. So because of that, right, for my recommended, or the trade that I would take, which is to hold on for the few years, right, and not to keep looking at the price, right, keep checking it like minutes, right, to see and to stress about it. That you need a very strong psychology. You really need to. That's why it is important to understand the fundamentals of why everyone need a little bit of crypto, right? And that is why, with that understanding, then the strong psychology can come about much more easier. But of course, there are threats, right? If you look at the left side, there are threats. So as I've said, it won't be a smooth ride in this next few years. It will be a lot of bumpy roads ahead, and potential 30 to 40% price decline. How do we get this 30 to 40% price decline? It was from the daily decline that we have seen from the last bull market, which is in 2017. That's why these numbers came about. So you must be prepared to actually experience this kind of occasional dumps. So one thing I do very well, I think, my personal opinion, is that I don't look at the price, right? I can go the whole day without looking at the price, because I then occupy myself with other things. Because for me, my target is really the 6 figures, right? Don't tell me. So I was like telling my significant other, do not tell me the price now that you go up to 13K or 14K or whatever. I said, I'm only interested if you tell me if it's at 100K, So for me, that's really the target I'm looking at. If you tell me this, $1,000 move in the current, even one day, so to me, I'm not very interested. So that's why, because I'm very clear on my fundamentals, because I'm very clear on my long-term target price, that's why I'm not affected. And I'm not the kind of person who then need to look at price on a minute or even half an hourly basis, yeah. But lastly is that, still, having said all this, we still must accept the fact that it will potentially go to zero. Then if you invest with that kind of mindset, then definitely you have nothing to fear, right? So that's all I have for today. I just want to again summarize, right? So my point is, again, if you do not have any coin, you are no coiner. So my opinion, or if you ask me what I would do, is that I will go in now. I don't want to wait anymore, because it is really hard to time the market. No one really knows, right? So a lot of people are saying that the rally happened too soon, so it might drop. But who knows? No one knows. But looking at the charts, the momentum upwards is very, very strong, right? So if you are someone who has some already, but you think you want to top up, Should you buy now? I think for these people, then you can average purchase your over the next, next few days or next few weeks, I think. Yeah. So that's what I think. Again, not financial advice, right? But just based on fundamental reasons, like especially these negative yield bonds, which is very, very big data that's coming out and is in Bloomberg, right? So institutional already in this game, but there's still a lot of opportunities going to happen. And you look at the charts, a lot of strong momentum upwards. All this, right, point me to say, if you ask me what I would do, this is what I would do. I would basically, yes, I'll buy it now. Yeah. So that's what I have for today. I wish you all the best, and I will speak to you next week. Yeah. Thank you so much for your time, and all the best. Thank you.